ए, ठीक है जी। Good evening, everyone. We'll just take a minute to make sure everyone joined in the lesson. And you can start our lesson very soon. I hope everyone doing well, and good evening to everyone. We're going to start our lesson now. Of course, like today, it will be our final lesson. Today, we're going to cover the chapter we have left, that is chapter number 5. So we're going to go through really quick because I don't have much thing in this chapter. So we'll quickly go through chapter number 5. And after that, we're going to practice the exam question. So that will be really important for us today. So we're going to start practicing one exam question. So you're going to practice one whole question number 1 to question number 6. So how many questions you're going to see in the exam, how the question will be look like, and how many marks will be from which chapter. So today we're going to see all of this. It's very, very important, obviously, like practicing some questions. And after the lesson today, I'm going to send you some more practice questions. And throughout this week, you can practice until the next Thursday before your exam. So next Thursday, we'll do the exam. And before the exam, you can do as much as practice possible. So we're going to practice one question. I'm going to send you some more practice questions so that you can practice yourself. And top of that, from your AAT website. So if you log into your My AAT account, you can do some more practice from there as well. That is so helpful. So if you can do that, that would be more nice. Okay, so let's start with our chapter number 5. And this chapter will be from the limited company. And of course, this chapter number 5, this is very limited information because in level 3, we do final account preparation, but that is mainly for the sole trader, not for the limited company. Now, the difference between the limited company and the sole trader, you already know. Sole trader accounts is quite simple. All you need to prepare the profit and loss account and the statement of financial position and submit it to HMRC. So there is a less compliance issue when you do with the sole trader. But on the other hand, when you prepare the accounts for the company, especially for the limited company, there is some year-end adjustment. For example, prepayment and accruals. This is one of the things you have to adjust manually. When you work for a company, let's say if you are the accountant or if you work as an assistant accountant or in any practicing, so when the client comes to you, they'll ask you, can you prepare the accounts for us? So in that case, you have to prepare the limited company accounts for them because most of the people, 99% of people will come to you, they'll have a limited company. And the reason is they open a limited company, they want to take the benefit of the limited liability. So this is one of the reason we would say most of the client will be from the limited company. And there you have to know how to prepare the accounts for them. Now, so many things that are very relevant. For example, the income statement and the balance sheet or a statement of financial position we have seen for the sole trader or partnership, more likely, more or less is same for the limited company as well. But except these two, for the limited company, we need to prepare some other bit as well. So other part of the accounts. For example, changes in equity. For example, statement of cash flow and for example, notes to the account, this type of thing we normally don't prepare for the sole trader. So you only prepare this thing for the limited company. Let's have a look what we have here in the chapter. Even though the chapter said introduction to limited company, so there will be not much calculation there. So this is just introduction. So we'll see what is we have, what is the information we need to know, the basic stuff for the limited company. Now, of course, we have some idea the nature of the company. Now we know we have a company that is a limited liability company. We have a public limited company. So these two are limited company. Limited company are same anyway. I'll tell you, it doesn't matter it is a private or public, it's the same story. So accounts will be same for any limited company. Doesn't matter it is a public or private. On the other hand, we have seen how to prepare the accounts for the partnership, and we have seen how to prepare the accounts for the sole trader. Today we're going to review everything once again from the very beginning till end. So every single account we have learned so far, we're going to revise everything today once again so that we can refresh our mind. We can try to remember what we have done so far. And from today, you need to do practice. Next Thursday, you will do the exam. So I'll send you the email for the exam anyway, and we can talk about the exam at the end of the class. But for the time being, we will just focus on the class. And before the end of the class, we can talk about the exam if you have any question. Okay, so let's move on. Let's have a look at the chapter overview. Now, chapter overview will tell us what we're going to learn in the chapter. It's very, very important. Like when you read a chapter, you try to understand the logic behind that. So why I'm doing the limited company? What does that mean, International Accounting Standard? How I prepare the accounts? Because at the end, this study will not help you if you cannot utilize it on your workplace. When you're working in a company, that time you have to make sure you know all of this and you utilize your knowledge there, because not all of this thing you're going to use on your workplace. For example, if you work in the management side, let's say you work as a management accountant or assistant management accountant, maybe for your whole working life, you will never use the financial side. You will never prepare accounts, will never prepare a cash flow statement. You never prepare a partnership account because you are working on the management side. Management side and the financial side is completely different. So the management accounting tell us how to prepare the management account, variance analysis, investment decision. This is everything for the internal purpose. So if we talk about the management, if you work in a management, so that means everything will be very secret. No one will know what you're doing inside. That will be inside of the management, inside of the organization, inside of the company. But on the other hand, if you work in the finance sector, that is open book. If you work in a finance sector, that is the open book. We prepare the accounts and we submit it to HMRC, and that is available to everyone. For example, if you want to see today how much is the income for Apple, or how much is the income for Google, how much is the expense, how much they're making, how much is their asset, you can see everything in a minute. So this is open for every single people. So financial side is very, very open. So you can see everything, how much is the asset, how much is the liabilities, because this one is a very, very open, so that people when try to invest on the company, especially for the public limited company. For example, today, if you decided to buy some share from Tesco, you want to know about Tesco more. So from the Google, you're not gonna find any financial information. So what you'll do, you open their financial statement. You see the last 3-4 years data. For example, last 3 years, how much profit Tesco make, how much is the net asset, how much liability they have. So after looking all of this, you take the decision, are you going to make an investment to the Tesco or not? So it's a public limited company. Anyone can buy share from Tesco. So you could be one of the shareholder. So it's very, very important you understand exactly which area you're learning going to be used for where. So sometimes some students tell like, I have learned a lot, but I never use it. The reason you never use it because you are not that field, you are not on that sector. because everything we're learning, we don't know how much you're going to use. For example, some of you in future, maybe you decided to work for yourself. Maybe you don't like to work for someone. Maybe you decided, I want to open my small business. I want to be accountant, or I want to provide services for all these small clients. Now I'll tell you one thing. So many people, they think like you have to be like fully qualified to become an accountant, or you have to be chartered accountant to open a firm. There is no requirement for that. Even if you're AAT qualified, you can open your own firm. You can provide any services to your client, like VAT, payroll, accounts, sole trader, any services, self-employed. You can provide all these services without any restriction, even if you're only AAT qualified. You don't have to be chartered accountant. But there is some certain restriction and regulation applied when the income for your client, for example, if any of your client come to you, and if his income, that means his revenue or turnover more than 10.2 million, then someone need to prepare the accounts with chartered accountant. So it has to be audited. If it is a requirement by the auditor, then it needs to be audited accountant. So if you have a client, they're small, and the amount their income or revenue is less than 10 million, you can provide the services. And tell me, 10 million is a very big income. So obviously, if you think like you start as a small company, so 10 million client, you're not going to get it in very soon. So still you can do some that. So some people, they said like I want to do something for myself. So you can do that, but you need to know how it works. It's very, very important. So when you learn from the book, then you actually looking at some financial statement from the real company, and you use some software, for example, QuickBook, for example, Xero, to see how you actually prepare the accounts there and what is the adjustment and how you make it. Once you make yourself ready, then obviously like you can start working for someone or for yourself. So it's very, very important. When you study, you try to find the logic for that, like how I'm going to use it and where I'm going to use it, like how is it work. It's very, very important. If you understand the logic, that will help you to remember for long rather than memorize it. Okay, so here we can see it, introduction to limited company accounts. Now when I say accounts, what I mean? When I say accounts means something I have to submit to HMRC. Something I have to submit to HMRC. Something I have to submit to HMRC or company house, or maybe both. In the accounts, the main part we have, that is profit and loss account. That one we already know what is profit and loss account. So we'll have a income. From the income, we minus all the expenses to get the profit. Why this one we need to submit to HMRC? Is HMRC interested how much profit we make? No. HMRC have no interest how much profit or loss we are make. HMRC want to see are we paying the right amount of tax or not. HMRC want to see it because they want to check we are not avoiding any tax. We are not paying less tax. We are paying the right amount of tax. That's why they're asking, can I see your income statement so that I can see how much is your income, how much is your expense. The reason they want to see is sometimes some type of expenses is not allowed. For example, staff entertainment. Staff entertainment, there is a limit. After that, this is not allowable expense. So for example, if you give a gift to a staff like £5,000 because he's leaving, and what you did, you put this one as expense on the income statement, and your profit become low and you pay less tax. So maybe HMRC will come back to you and tell you, listen, you paid someone as a gift, and this one is not allowable expenses. So there is a lot of expenses that is not allowable for the tax purpose. So HMRC want to see you didn't include any expenses that is not allowable for the tax purpose. So that's why you need to submit this to HMRC. The next step for the accounts, we submit balance sheet, or we call it a statement of financial position. This is the one we submit to HMRC. Then this two we are very familiar, we already know it. The next thing, this is also part of the accounts. This is called statement of cash flow. Statement of cash flow. Now, why it is important? I'll tell you why it is important. Statement of cash flow. because we prepare profit and loss account based on the accrual concept. Accrual concept. Based on the accrual concept, we prepare profit and loss account. So for example, if we have a profit and loss account and we said our profit is 1 million. For example, we said the sales is 2 million and the expense is 1 million and the profit is 1 million. So let's say we said our profit is 1 million. Now, when you ask this person, how much cash you have on the bank? And the person said, we have no cash. Let's say the person said, we have only 20,000 pounds. So you will be so surprised, like, how come your profit is 1 million pounds and you don't have any cash for the business? Now, the person will tell you, listen, all my sales is a credit sale. All my sales is a credit sale, and I didn't received any money from my customer yet. All my sales is my credit sale, and I did not receive any money from my customer yet. So this is the reason I don't have any cash. Now, people can sometimes do things for manipulate the accounts. So for example, you try to increase the share price. You want to show to the public like you are making a lot of profit so that everyone try to buy share from your company. So it could be one of the reasons. So that's why when you shows more income, so the investor also want to see what is the cash flow. So in the cash flow statement, we have a very, very real picture, how much money actually we have in the business. So cash flow will tell us how much exactly cash we have with the business, so that it will tell us how liquid the company is. How liquid means how much cash the company have. So this is very, very important. So it's all sales is not credit sales, or not trying to showing the more profit in the statement of profit and loss account. So we'll find the reality from the cash flow statement. So in cash flow statement, if they said 10 pound, that means right now the business have 10 pound. It's very, very important. So before you make the investment, you just don't look at the profit and loss account and the statement of financial position and you see the company making a lot of profit and you invest all of your money. We don't do it. We look at the statement of cash flow statement as well. From there, I want to see how viable the company is from the cash point of view. So that's why this is also part of the accounts. The next thing we're going to see, changes in equity. Changes in equity. Changes in equity is a part if the company's equity goes up and down. For example, last year, the business have a lot of debt. For example, they took a lot of loan from the bank, and this year, the business don't have that much loan, so they paid it back. For example, last year, whatever was investment by the owner, the shareholder, they took something back. So anything changes with the capital, you can see it here with the changes and statement of equity account. How much profit you make, how much equity is changes, you can see from there. It's very, very important. You can see shareholders' perspectives, like how much investment they make, how much they already took, how much is the leftover. You can see everything from there. The last one we also see, that is called notes to the account. Notes to the account. Notes to the account means this is the explanation. This is the explanation of the accounting term. For example, on the accounts, normally we see a terms called director remuneration. Director remuneration. We see a terms that is called director remuneration. Director remuneration is the terms. Now, for example, people like you and me who are not accountant, we don't have any accountant background, the people, but they don't understand the meaning of that. So in notes to the accounts, there is a breakdown or there is a meaning of the notes to the account. So what is the meaning of the director remuneration? You can find it on the notes to the account. For example, we said trade receivables. Now, if the person is not from the accounting background, he don't know what is trade receivables. He have no idea what is trade receivables. He have no idea what is depreciation. He have no idea what is trade payables. So this type of terms he need to understand because he is the investor, he's the shareholder. He don't have to be accountant to understand. So that's why in the accounts there should be explanation. What does that mean? What does that mean, the trade receivables? What does that mean, the trade payables? So that when they read it, they can get clear what does that mean. So this is very, very important. So this is also part of the accounts. So we understand how many things: the profit and loss account, statement of financial position, statement of cash flow, changes in equity, and notes to the account. But obviously, this is just the introduction of the limited company. They will not ask you any calculation or anything from this chapter. So all we are doing, we are learning what is inside. So when you will be in level 4, then you can actually prepare all of this. So in level 4, you will see how to actually prepare the limited company accounts. All right, so the next bit we have here, accounting standard. This is IS. Now there is the IS and there is the IFRS. IS is International Accounting Standard and IFRS is International Financial Reporting Standard. Before it was only IS. Before it was only ISS. Now they changed it a little bit. So when they modified it, for example, before they said IS2 is the inventory valuation, IS11 is the construction contract, IS15 is the revenue recognition. So when they do some little bit modification based on the time demand or new tax requirement, if they make any changes, so they change the name. So from IAS, they make it now IFRS, International Financial Reporting Standard, but it is basically or actually the same thing. It is the law that we follow to prepare the accounts or follow to prepare anything that is submitted to HMRC or from the accounting perspective when you follow certain standards. Okay. Then the next thing we have the meaning of some word. It's asset, liability, equity, and income. We already know that. What is asset, what is liability, what is equity, and what is expense. We have already idea about it. So you're going to see it anyway later on. Then we have a concept. They said underlying assumption. Underlying assumption is a going concern. This means we assume the business will be continue for foreseeable future. So when you open a business, we don't open it for close it down. When we open a business, we don't open it for dissolve it. When you open a business, we open it for forever. For example, if you see some business, they said established in 1769, established in 1969. So this is basically 100 years, 200 years, 300 years. So the person who opened the business, he is dead. He is not anymore. But the business is always here. The company is always here. So you always assume the business we are opening that will continue forever. So this is called going concern concept. So we understand business will be trading in the market for foreseeable future. Okay, so let's have a look what else we have. Then we have some other information. We have qualitative characteristics. That one we have relevance and faithful representation. So information has to be relevant. Any irrelevant information we don't present. And the information has to be truth, so it has to be faithful. Then we have some qualitative characteristics, that is comparability, variability, timeliness, and understandability. So you're going to see the meaning of that. We'll read that anyway. Okay, let's go inside of the chapter and have a look because we need to complete the chapter really quick because we want to do some practice today, real practice. Okay, so here we have what is accounting standard. This is just the laws of the accounting. So I don't think so. You have to spend a lot of time for that. The purpose of the financial statement. So we know it is the asset and liability, profit and loss, and cash flow statement. We discuss all of this. Let's talk about this one, this activity. Activity 1. They said use of the financial information. Basically, they are asking who used the financial information and why they need to use it. This question will not come in the exam, but this is for your understandability. For example, if I have accounts, let's say I have accounts for Tesco. So how this Tesco's financial statement or accounts is important for me, and who going to use that and why? So the first person, they said managers. The manager used the financial statement. Why? Because they are the employee. They want to see the company is stable. The company will be survive for long enough so that they can secure their job. They can see the company making a sale good so that they can target, they can fulfill their target and get their bonus. For this type of reason, it is important for the manager to see the financial statement. Then employees, again, same thing. Employees want to see their job is secure. So they need to see the company doing good in order to feel like their company will be survive for long. Investor, investor want to see how much they invested on the company, or maybe the prospective investor, they want to see if they invest on that company, they will get their money back. It's very, very important. So they want to see the financial statement to check they will get their money back if they invest on this company. All right, so let's move on. Then we have a lenders. Lenders like from where we take the loans, for example, the bank. So lenders want to see if they give us the money, we can pay them back. So financial statement gives them an idea how good we are, how our business is operating, and we are doing good or bad. So they will get some idea so that they can give us the money, or they said, no, we cannot give you the money because your financial situation is not really good. We cannot lend you any money. Then we have suppliers. Same thing, supplier want to see anything we buy from them on credit, we can pay them back. Because in business, most of the time we purchase on credit. We don't pay anything on upfront. So they want to see we can pay them their money. So that's very, very important for them to look at the financial statement. Finally, the customer. Now the customer is the last one because customer normally don't see the financial statement, but some customers they do see for some reason. They want to see how the company is doing. Is the company doing anything for the country? For example, Tesco they do some charity for cancer research UK, or some company they help to save the children. So you want to see, and some companies said we only have the recyclable plastic, we don't do any plastic. So sometimes the company, or as a customer, you want to see this company is good for the country. And from the financial statement, you can check how much corporate social responsibility they are filling. CSR, corporate social responsibility, is very, very important. Nowadays, corporate social responsibility is one of the important part for all the company. For every single company, they take it really seriously, this corporate social responsibility, because people nowadays want to see you doing anything for the community or not. So this one may be important for you as a customer. All right, so let's move on and see what else we have. Conceptual framework, we have accounting principle, we have a going concern. So this is the fundamental assumption. We assume the company will be operating for the foreseeable future. So you can read yourself. This is very easy thing, just a theory. Let's talk about the accrual concept. Accrual concept. Now this one we have done so long. So accrual concept, we have this one in UK, any accounts you prepare. For example, if you go for an interview and if they ask you what concept we follow in order to prepare the accounts, you always said we follow the accrual concept. If your manager asks you, is there any other name of the accrual concept? We said there is another name. There is another name. We called it matching concept. Matching concept. So matching concept. So accrual concept, we have another name. We called it matching concept. What does that mean? What is accrual concept? Accrual concept is the concept where we match the income against the expenditure. Where we match the income against the expenditure. If I want to make it really simple, if I want to say it in a simple way, I said, if any expenditure happened for this period, I record it for this period, doesn't matter I received the money or not. For example, if we talk about 2019, let's say I make a sale here in November, 2,000 pound, and the customer going to pay me next year, let's say 2020. I make a sales on 2019, but the customer going to pay me after 2 months or 1 month, so I'm going to receive the money on 2020. But according to the accrual concept, or based on the accrual concept, this income I'm going to record for this period. So for example, for the same thing, for example, if I have electricity bill for the month of December, and if I paid the bill on January next month, that will be next year, but I'm going to bring it back. I'm going to record in this year. So that's why it is called matching concept. Matching concept is, doesn't matter I received the money from the customer, doesn't matter I paid the money to the supplier. If the transaction is relevant to this period, record it this period. And in UK, 99% of accounts based on accrual concept. Anywhere you go, all these companies, they use accrual concept to prepare the accounts. And on the accounts, you can see they will tell you we prepared the accounts based on the accrual concept. Okay, so let's move on. So we have some meaning of some word. Let's have a look at. The first one, we have comparability. Comparability said it must be possible to compare the result of different entities or to compare the result of any entity from year to year. Very important, we do the comparison. For example, let's say if Tesco want to compare their performance, how they can compare? Either they can compare with the last year. For example, last year their income was 1 million and this year income is 2 million. That means they are doing good. So they're comparing their data with the last year data. So they said, I'm doing good because last year income was 1 million, this year 2 million. So that means we are doing better. Now, if the business is for the first year, let's say you have a business and you don't have any previous data. So this is your first year. How can you compare? You compare with the industry. For example, if you have if you open a chain shop like a Tesco, and if you don't have any previous data, then you compare it with Asta or you compare with Sainsbury, how they are doing. So for example, if you are making 1 million and if Tesco, Sainsbury making 5 million, that means you are not doing good. So you compare with industry. So either you compare with your last year or you compare with the industry. So this is basically the comparability. That's one used by the management, almost every organization. Verifiability, the most useful information can be independently verified. So if you have a big figure, for example, sales or trade receivables or bad debt, you can verify it independently. It's very, very important. So if you have a doubt on any figure, you can verify it. So there should be enough breakdown for that. And the workings paper need to be available for up to 6 years in any case anyone want to see it. And then you have a timeliness information must be available to user in the time to their influence their decision. So obviously, for example, if you said everyone need to buy the share by 31st of January, and everyone invests the money, their money to your company, and the next day you have another news, or next day you said this year we're going to pay very less dividend. So last year the dividend was 10%. This year the company decided to pay dividend only 5%. So if this is the case, like then some people will think, the investor will think, okay, so why don't you tell it before? So if I know it, if I knew that, I didn't invest all the money to your company. So the decision or the information should be available to everyone before they take their decision. So you don't give any information after the decision has been made. Then we have understandability. Information should be presented clearly and concisely to make it understandable, so that when I speak, you need to understand it. For example, I'm taking the class, I'm explaining something, so all of you need to understand it. So when the management, they prepared the accounts, or the director, he prepared the accounts, uh, the shareholders, the actual owner of the company, they have to understand it, every single meaning. For example, what does that mean, the bad debt? What does that mean, allowance for bad debt? So you have to explain to the shareholders on the AGM, on the annual general meeting, so they actually understand it, the meaning of that, and basically what's the plan. So you need to tell everything. So it has to be very, very clear to them and understandable. So sometimes things are the way they present is very tricky, because they are the tricky people. The CEO were very tricky people. So the way they write, maybe the shareholder, they don't understand the actual meaning. So basically that's not right. It has to be very, very clear and transparent to everyone. All right, so let's move on to our next point. Let's see what else we have. This is all the theory here I can see. And we already discussed that. Statement of financial position, statement. This is the template. That's it. There's a template for the profit and loss account. I think you already know the template. So let's quickly have a look. From the revenue could have a different name. Revenue, people can say turnover. We can say it sale. We can say it income. Same story. Revenue, turnover, sale, income, same thing. Then we have cost of sales. We know how to calculate the cost of sales, isn't it? Opening inventory plus purchase less closing inventory, it will give us cost of sales. Now there is a difference between the cost of sales and the admin expenses. So cost of sales, the cost that could be directly attributable to the product. For example, if I go to the university, or if I am giving the lesson, so the tutor cost will be the direct cost for the business. If I make this pen, so this plastic or ink will be the direct cost for this product. So for example, the heat and lighting we have used, the overhead we have used, the rent we have paid to use the places, the rates, the bills, telephone, everything will be the operating expenses or administrative expenses. So the direct cost will be included in the cost of sales. The direct cost will be included in the cost of sales, and indirect cost will be included, the distribution cost and the operating expenses or admin expenses. So after minusing these expenses, we have a profit from the operation. And after that, we do the finance cost separately. The reason we do the finance cost separately, finance cost is also allowable expenses for the tax purpose. For example, if business take any loan, for example, 1 million from the bank, so whatever is the interest, this one also allowable expenses for that tax purpose. So business not only minus all the business expenses and from the income, also an interest they pay to the bank, this is also allowable expenses. So that's one we called it PBT. This one we called it PBIT, PBIT, profit before interest and tax. Profit before interest and tax. Sometimes some company, they do write it in a short form. They said PBIT, that is profit before interest and tax. And once we use the I, so once the interest is gone, that is here, finance cost. So once we minus the finance cost, we have only PBT, that is profit before tax. And from the PBT, if we pay the tax, so T is gone, only profit is remaining for the year. Now there is a profit here, it could be loss as well. So either it could be profit and either could be loss. I think all of you know this template is very simple. So let's move on. So should be another template for the statement of financial position. This one is quite familiar for us as well. So asset, we have a non-current asset. And before that, we haven't seen this one, intangible asset. Let me quickly explain what is intangible asset. Intangible asset is the asset that either I cannot see or either I cannot touch. For example, goodwill. For example, goodwill. For example, copyright. For example, database. For example, software. This type of asset that either I cannot touch it or either I cannot see it. This type of asset, we called it intangible asset. And if I can see something and if I can touch something, we called it tangible asset. Then we have PPE, property, plant, and equipment. That is always we represent together in the financial statement. Then you have a current asset, any asset that very soon going to be converted into cash. So any asset that will be converted into cash very soon, we called it current asset. Normally in the current asset, we have inventory, we have a trade receivables, we have a cash and bank, we have a prepayment. This type of asset we always have in the current asset. Then we have a equity and liability. Equity and liability, this is the part of the shareholder. So equity, the difference between the equity and the liability is, if you remember your accounting equation, it's an asset. If I break the asset, I have liability and I have equity. This is the accounting equation. For example, if my asset total for the business is 20, so my liability is 10 and equity is 10. So equity and liability basically equal to the total asset of the business. So equity means this money actually invested by the shareholder. This money all belongs to shareholder. So this money is not from the loan, from the debt. And the liability basically from the third party. It could be from the bank, could be from the friends and family, from anyone, from the third party. So the difference between these two is, so for example, my total asset or total investment for the business is £20. Out of 20, 10 was from me, maybe my savings, or I sold something, my personal asset, and another 10 I borrow from the bank. So 10 is the liability, 10 is the equity, and 20 is the asset. So total investment 20, 10 from me, 10 from outside. Okay, we have a share capital and the share premium. Let's talk about that. Share capital is the ordinary share. Ordinary share, this is for the public company. When you sell and buy share from the market, we already heard this word so many times, share. Now share is the small portion. Sell is the small portion of the money. Share is the small portion of the business value. For example, the total value of the business is 1 million. So if I break down 1 million shares, so every share value will be £1. So you can buy only one share, so you'll be one of the shareholders. This is the total of the investment, whatever is the value of the company, this is a portion of that, the share capital. Now share capital have two types of share capital. One is ordinary share capital, one is share premium. Share premium, as the word said premium, this is bit different than the normal share or ordinary share. The difference is if the company gone close, if the company gone bust, or if the company is dissolved, so all the assets the company have, if they sell it, so whatever the money will return, first the share premium shareholder, they'll get it back. So for example, there is two persons. For example, there is a Elena and there is a Osim. So Elena is the ordinary shareholder and Osim is the premier shareholder. So if Osim is the premium shareholder, so Osim will say, I'm the premium shareholder. So whatever company sold the money, so give my investment back first. So Osim will get first his investment back. And if anything is remaining, then Elena will get it back. Now remember that the good thing is like Osim get back first, like before Elena get anything, but Osim will only get back what he invested. But if anything remaining, a lot, a million, everything will get by the Elena. So ordinary shareholder get everything, whatever is remaining. And the premium shareholder, they only get whatever they invested. There will be no exam, this type of question. I'm just telling you to understand what is it exactly, but there will be no question in the exam. Okay, the retained earning and the revaluation surplus. Retained earnings. Retained earnings, we called it RE. Retained earnings, we called it RE. Retained earnings is the money that we keep from the profit. For example, in 2019, if the business make profit, profit, they make 20,000. And from this 20,000, if we give dividend 10,000, and the 10,000 is the remaining, it's called RE, retained earnings. So from the profit, whatever dividend we give to the shareholder, so dividend go to the shareholder. So after giving the dividend, whatever profit is left over to the company, you called it retained earnings. Business keep the retained earnings for the future investment to make the business bigger. For example, if you have one branch, so you have a lot of profit, you don't give everything to the shareholder. You said, keep some profit, so we're gonna make another branch, or maybe you're gonna make our store more bigger, or maybe you're gonna bring more product this time. So if this is the case, so you keep some money, this is kind of a savings, so this is called retained earnings. So from the profit, anything you kept for the business, we called it retained earnings. Revaluation surplus. Revaluation surplus is all about if you revalue any asset. Very, very common. Business do revaluation of the land. So for example, 20 years back, you buy a land by spending £10,000 and the value right now is £12,000. The difference is 2,000. This 2,000 we call it revaluation surplus. So normally the land value, it is assumed normally the value of the land never go down. It is always appreciated. It's not depreciated. Land value always go up. So anything goes up, difference we call it revaluation reserve. All right, the next one we have bank loan. I don't think so. I need to discuss that bank loan. You already know what is bank loan. Let's move on to the next one. We have the current liabilities, trade payables, that means credit supplier, you know it. Short-term borrowing, you know this, all of this. I think this is it. Let's move on to the next activity. On activity 2. On activity 2, we have indicate the conceptual framework, qualitative characteristics that are being breached in the situation. So you didn't follow the compliance, you breach it. The first one, they said that directors have decided to move some expense from the cost of sales to admin expense. So the company director said, move some expense from the cost of sales to the admin expense. Now, basically he's saying some direct cost put in the indirect cost. Now, obviously at the end, the profit will be same because both are expense, but you are breaching the comparability here because last year, maybe your cost was 10,000 cost of sales. And this year your cost of sales is 15,000 and you decided to move 6,000 from here to the admin cost. So now you will tell this year cost of sales is 9,000, even though it was 15. And because of that, admin cost even was low, that will be gone high because you moved some direct cost to the indirect cost. Now the admin people, the selling people, they will have more pressure, like how come your cost gone high? So this is cannot be comparable. So this is you sacrificing the comparability. So it's a comparability. The next one is said, the accountant has produced explanatory means explanation note, which are very technical and nobody understands what they mean. So you are the accountant, so you write something on your word like depreciation, trade payable, trade receivables, and basically all the people on the board, they are not from the accounting background and they didn't understand anything. So what basically you're sacrificing here? So what is basically being breached in this situation? So you have 4, comparability, timeliness, understandability, and verifiability. So obviously the understandability. It is not clear, it is not understandable. So we compromise the understandability here. All right, move on. Okay, there is a definition of the what is asset, what is liability, what is equity. You can read yourself. This is not something that's difficult. Let's do this activity quickly. Activity 3, elements of the financial statement. So what elements we see in the financial statement? The first one is the resources controlled by an entity. The resources controlled by an entity as a result of past events from which create the future economic benefit are expected to flow in the entity. This is very like, I would say, very hard word even to understand it. It said like you buy something previously and that will create the future economic benefit. For example, you buy a photocopy machine now, and from now it will start printing for the business. That will create some future economic benefit. So you buy a photocopy machine today, that will create future economic benefit. So you buy it today, so you have a past event, and because of that, the future economic benefit will be created. So what is that? What do you think? What is the element we called it? Is it an asset? Is it a liability? Is it an equity? Is it an income, or is it an expense? So obviously, if we buy something now because of the past event, it creates a future economic benefit. We called it asset. We called it asset. Then we have the residual interest in the asset of an entity after deduction all the liability. So if you have a total asset, from the asset, if I minus all the liability, what is left? What we called? You remember your accounting equation? So asset minus liability, what is the leftover? We called it equity, isn't it? We called it equity. Whatever is the asset, remember that one, your accounting equation. Obviously, this one the level 2 isn't. So don't forget the accounting equation. So as I said, asset, let me write it down for you. So the accounting equation, to easier to understand it, asset, the breakdown is liability and equity. So basically these two exactly equal to the asset. Now your liability whatever and equity whatever, it will be exactly equal to asset. Now for example, if I said your asset is 20, liability is 10, equity is 10, what happened here? So this 10 and 10 is 20. Now if I said if I don't know my equity, how much is the equity? So 20 minus 10, it will give you 10. If I say I know my equity, but I don't know my liability, so how we get the liability? 20 minus 10 is 10. If I said I don't know my asset, how much is the asset? So liability plus equity is the asset. This is the accounting equation. If you make this graph on your paper, you will understand the accounting equation. You'll never forget it. So this is your equity. Okay, the next one we're going to see here. A distribution is equity, participant is an expense. So they said if you distribute the equity to the participant, to the shareholder, is it an expense? It is not an expense. It is not a business expenditure. So it's absolutely false. When you distribute the equity, is the return of the investment. It is not expense for the business. All right, you can see there is not much thing in chapter number 5. So obviously you can read yourself once again. This is the end of the chapter. But we're going to start our, as I said, we're going to start an exam question. That is like more important for us. So let's start with that. So we'll practice the whole exam question. And from there, we'll see, like, we'll revise the whole book once again. And if you have any question, we'll discuss there. So let's move on. So I have a question here that is from the AAT. It's a sample assessment 1. So we're going to start from this question. And in this exam, you will have 6 questions total. You can have a look at this one. Question number 1, task number 1, we have 15 marks. Task number 1, we have 15 marks. You can see it. And in this 15 marks, you have a big question. And after that, you have a requirement. The requirement here, we have purchase ledger control account. Remember, in this type of question, this question from the incomplete record, chapter number 2, from the incomplete record. Remember that in this question, you need to know what you're exactly looking for. And how do you know that? The question will tell you what you're looking for. The question will tell you exactly what you're looking for. We can see here, In this question, they said, find the missing discount figure. So they're asking to find the discount. They're asking to find the discount. So read this question very carefully. I've seen the student, they become so confused. They then don't know what they're looking for. That's what I'm looking for from here. But the question will tell you what you're exactly looking for. Now, if we know the template for the purchase ledger control account, I'm sure all of you know this one. So if you remember your T account, purchase ledger control is a supplier account. It's a credit supplier balance. It's a credit supplier balance. So that means we purchased something from the supplier but did not make the payment yet. We have to make the payment. So for that reason, all this opening balance will be on the credit side. So opening balance will be the credit side. If I buy more, so the purchase will be this side. Then if I paid something, any money, so bank will be this side. Then if I received any discount, then discount received will be this side. And the balance sheet will be this side. So this is the template for the purchase ledger control. So if we know it, it's going to be very easy for you. So it's the opposite of sales ledger control. On the sales ledger control, we do opposite. Opening balance on the debit side, sales on the debit side, and if there is a payment on the credit side, discount allowed on the credit side. It's just the opposite of the sales ledger control. You need to have this template on your head. Incomplete records will be 20 marks in the exam anyway. So make sure you have a very, very good understanding from chapter number 2, incomplete records. Okay, this is the requirement number 1. Then we have a requirement number 2. Let's have a look at that. The next one, I have VAT control account. So first thing first, I need to identify what I'm looking for from the VAT control account. It's not the VAT control account, the normal way you do like T account, complete the ledger account. No, this question will give you everything and they'll ask you to identify something because something is missing. That's why we called it incomplete records. The records is not complete for some reason. So we have to complete the records. Let's have a look at that. Find the closing balance. So from here, I need to find the closing balance. Closing balance means balance CD. We all know it. Closing balance means balance CD. So that's fine. And we remember the template for the VAT control account. So if the liability gone up, if I need to pay to HMRC, then all in the credit side, so liability. And if I reduce the liability, for example, I don't need to pay, that will reduce my liability, that's all on the debit side. So opening balance always on the credit side. Then we have, if I make a sale, doesn't matter what type of sale, cash sale, credit sale, any type of sales, it will come here. I have to pay the VAT if I make a sale. If I receive a discount received will come here. Then if I make a payment to HMRC, bank will come here. If I buy something, purchase, that means I have to claim this VAT back. So that will reduce my liability. That will come in the debit side. I hope all of you remember that your VAT control account. If you remember this template, incomplete record will be really easy for you. If you don't remember it, that will give you a lot of stress in the exam. Okay, so let's move on. So the final question we have here, that is the total record in the cash book for the year ended 31st March 2007 were receipts. So on the cash book, on the receipt side, we have this. On the payment side, we have this. That means debit side, we have 204.48, and we have credit side 205.718. That's it. And they're asking, assume there are no year-end adjustment. They're asking there is no adjustment here. What will be the opening balance on the bank as at 1st April? Because this is ending on 31st of March. So next day, what will be the opening balance? All you need to do, we need to find how much was the opening balance for the bank. So from the opening balance from the bank, we added all the receipt and we minus the payment. So for example, if I said at the beginning of the month, I have £10 on my bank and I deposit another £5 and I spend £10. So how much is left? So 15 minus 10, so 5 is left. Exactly the same thing we need to do here. Anyway, let's do this question so we'll be more clear. But I think I need to write it down, this information in the corner. because if I scroll down, you will not see it. So let's write it down quickly. So the first thing first, so we write net, VAT, and total. So sell 159, 100, VAT 31,820, and the total is 190,920. Then you have a sales return. I'm writing SR, that is sales return. The total is net is 1610, VAT is 322, and the total is 1932. Then you have purchase. Purchase net is 124,940. VAT is 24,408, and the total is 149,348. Okay, so this is for our day book. Then you have a further information. You can see general expense. Okay, general expense net is 7510, VAT is 1502, and the total is 9012. Then we have some opening balance and closing balance. Let's have a look. So we have opening and closing balance. 31st March 6, 31st March 7. That's the closing balance. So trade receivables, we have 17,360. Closing 18,940. Then trade payable 13,345. 14,656. Then you have closing inventory. That is 10,520. 10,520. Then 11,300. Then you have a VAT. VAT, you don't have any closing balance, just the opening balance 1806 credit. And you have a bank. You have opening balance 3811 debit. It's not overdraft, it's the money you have. After that, we have some information here. It said general expense are not processed through the purchase day book. So general expense is not included on the purchase day book. 9012 was posted to the general expense account. All the VAT expense is recoverable. So whatever VAT you have paid for the general expense, we can claim it back. So we already know this one, 1508, you already like. Write it down here, we're gonna get it back. Cash sale, 4,200 were made, excluding 20% VAT, and the total bank was posted to the cash sale. So we need to find the VAT. How much is the VAT on cash sale? So it's already posted, but the VAT is excluded. So it doesn't matter it is a cash sale or credit sale, we have to pay the VAT. So let's do this one, 4,200. 4,200 times 20%, that is 840. 840, that one we have to pay the VAT. Okay, so let's move on. There is some other information as well. All purchases are on credit, so all purchases from the purchase day book are credit, that's fine. The trader took advantage of prompt discount, okay. VAT has been correctly accounted for, okay. So all the VAT are correctly accounted for. There is no problem for that. Okay, so I don't think we need to write all this information. We can see this anyway. So let's do this one because we can see all this together. Okay, let's do this one, everyone together. Let's do our purchase ledger control account. What we're looking for from here, we're looking for the discounts from here. Normally expecting the discount will be on the debit side. So let's have a look because it's a discount received. Opening balance. First, we start with the opening balance. So we have a trade payable. I think that's the trade 18. Why write both trade receivables? Let me go back. Trade payables, 13,000. So the next one is trade payables. All right, so this one is trade payable, not receivable. So let's write it down. Trade payable. What's wrong with? Okay, trade payables. So let's do the opening balance. This is the opening balance. That's the closing balance we have. Let's do this one. So opening balance. Which side I'm going to write the opening balance for the trade payable? Debit side or credit side? Trade payable opening balance. So you're going to write always on the credit side. Why? Because this is a liability account. I have to pay this money to my supplier. So it's a liability. I'm going to write on the credit side. So opening balance, balance BD. Balance BD. That is 13,345. Okay, this is the one. Then what is the next thing I'm going to looking for the purchase ledger control account? The next thing will come for the purchase. How much VAT we're going to claim for the purchase? So how much purchase we're going to include here? How much is the total purchase for the whole period? We're going to see that. So the total purchase, we can see here, the total purchase is 149. So you're going to write purchase day book, that is 149,348. 149,348. All right, so the next point, what is the next point we have here? We have a balance CD as well. So you can take the balance CD. Yes, we take the bank, Mohammed. So let's take the bank. How much you already paid to supplier? Bank. How much you already paid to supplier? Amount to supplier. Amount to supplier. How much we paid? 145, 137. So we already paid 145, 137. Then what is the balance CD? So you're going to say balance CD. This is also given on the question. Balance CD, that is 14,137. 14,656. 14,656. That's it. So now I have all the information, and now I have to find the balancing figure. So I'll add the higher side. So we can see which side looks higher, 149 and 13. So this side looks higher, the credit side. So let's add the credit side. How much it is? Add the credit side, 13,345 plus 149,348. The total is 162. 162,693. I'm going to write the same thing, 162,693, and I'm going to find the difference. So I'm going to minus these two, that is 14,537 minus 14656, that is 2,900. So this is the one we're looking for, discount. We're going to write discount received. 2,900. Why discount received? Because it's in the purchase ledger control account, we receive the discount. If it is a discount allowed, that means it's a sales ledger control, because we cannot allow the discount to the supplier. We only can receive the discount from the supplier. So that's why the discount received. If it is a sales ledger control, we write discount allowed. That will be the opposite side. All right, so any question from here, from the purchase ledger control, before we move to the VAT control account? Anything, any question on your mind? And this is the thing, you have to remember the template, what comes to each side. You look for exactly what you need. You don't have to read the whole question. If you know what is coming, it will come there. That's it. All right, so let's move on. Let's move on. The next one, we have VAT control account. VAT control account. Let's start this one and let's do it together. So the VAT, we have opening balance. VAT, you have opening balance, that is 1806, and it's credit. We'll start with the credit balance. Normally, VAT is always credit balance. Remember that. Normally, VAT is always credit balance. Even the question don't say the credit, it still is a credit. But if the question says a debit, then take it to the debit. Otherwise, it's always credit balance. So you said balance BD. Balance BD, that is 1806. That's on the credit side. Now all the VAT we have to pay from the sales daybook, from the cash sale, anything we have to record on the credit side. So let's have a look. First one we're going to do from the sales daybook. From the sales daybook, we can see our VAT is 31,820. Very well done, Omid. So sales daybook, we said daybook 31,820. Then we have a cash sale as well. Yes, very good. So the cash sale we have 840. That's it. That's all I have for the VAT I have to pay. That's my liability. Now, before I make the payment, I need to see is there any payment I already make or anything I'm going to claim back. So let's have a look at that. The first thing, what I'm going to claim from the purchase daybook, isn't it? From the purchase daybook. So purchase daybook, that is 24 Amit. Okay, I'll take your figure 24408. Then sales return, yes, there is some VAT. If my customer return to me, I'm not going to pay VAT for that, isn't it? If the customer return to me, I will never pay VAT for that. So I'll claim the VAT back. So sales return, that is 322. Okay. Then what else? We have a general expense. This VAT, they say recoverable. So we're going to say general expense, that is 1502. And the final thing I want to see is there any VAT I already paid. So let's have a look. The bank. On the bank, we can see there is a figure here. It's a HMRC for VAT payment 6169. We already paid this money, so we're not going to pay this one again. So you already paid, so you're going to claim it back. So you're going to minus it from the total liability. So that is 6169 bank. 6169. Anything else from here? I don't think so. We don't see anything else because we take this, we took this, yeah, we took everything. So there is nothing left. All I need to do, we need to find the closing balance. How we find the closing balance? We added the higher side minus the lower side to get the closing balance, that is balance CD. Okay, so let's make the total. So total should be, normally is credit side always higher. So let's have a look at that. 34,466. Okay, and 34,466. And is the balance sheet 2065? Omid, can anyone check as well? So that we can say our balance sheet is correct. Balance sheet. So all of this 34,406 minus 24,408 minus 322 minus 1502 minus 6169. So 2065. This is the one we're looking for. That's the balance sheet they're asking. We got it. So you can see that this incomplete record question will be always in the exam. So you have to make sure you are very good at that. So this template need to be on your head, like sales, then cash sales, then all this purchase, all this thing will be on the debit side. This has to be on your head. Okay, let's find what is next. Let's find the next question. All right, the next question is asking how much will be the bank closing balance and the opening balance. So 31st of March, we can see we receipt 200,448 and a payment 205,718. They're asking how much will be the bank balance. The same is a very simple thing. So let's start with the opening balance. How much money we have on the bank? So on the bank, we can see at the beginning, we had 3811. This is the money we had on the bank. And we have received this money. So plus 200,448. Then there's a payment. This one we paid. So minus 205,718. How much money you have on the bank? How much money you have on the bank? So 3811 plus 200,448 minus 205,718. 1459. Okay. 1459. And this is the question said is a debit or credit? Overdraft. If it is overdraft, so that means whatever you have, you spend more than that. So it will be minus, is a credit. It's overdraft. So that means the money you have, you spend more than you have. For example, you have 10 pounds, but you spend it 12 pounds. So the 2 pound is a minus. That's the overdraft. So using the bank money, and overdraft is a liability, is a credit. All right. So any question from here so far? From this incomplete records, whatever we have discussed, any question from here so far before we move to the question number 2? That will be for 15 marks. All right, so that's good. There is no question. So we move to our next question then. So we move to the next question, task number 2. Let's try everyone together. This task, it says, this task is about incomplete records and applying ethical principles when preparing final accounts. Okay. Show whether the following is true or false. They're asking show whether it is true or false. Gross sale margin percentage may be calculated as gross profit divided sales times 100%. Is it true or false? So what is the ratio? How can we calculate the gross profit? What is the formula for that? Is it gross profit divided by sale times 100? Is it true or false? What do you think for that? So we're going to take true or false. So any margin, remember any margin means the profit. Margin means the profit. Margin means the profit. And any profit we calculate on sale. So remember, if I said gross margin, so my gross profit will be in the top GP and sales will be in the bottom. And 100 basically represents the percentage. That's why I multiply by 100. So for example, if someone asks you, what is the gross profit? So gross profit. So the formula will be GP divided sale times 100. if someone asks you what is the formula for the net profit, then you said net profit, NP will be in the top, sales will be in the bottom, times 100. So question will tell you margin. Margin means the profit. And remember, if I tell you, for example, if I tell you your profit is 10 and your sales is 100, what is the profit percentage? So we can do it easily, isn't it? So profit is 10 and sales is 100. What is the profit percentage? So 10 will be in the top, 100 will be in the bottom. So that will give me 10%. That's very simple calculation. So gross sale margin, the formula is gross profit divided by sales. And this is our true. Of course, this is the true. Okay, so let's move on to the next one. Next one, they said, you are a trainee accounting technician who prepare final account for a number of sole trader client. So you are a trainee accounting technician who prepare final account for a number of sole trader client. Okay, you have the following information about a business. You have the following information about the business for its year ended 31st March 2007. Okay, so let's have a look. That year ended is 31st March 2007. It is not registered for VAT, so you don't have to worry about the VAT. Don't worry about the VAT because the question said the business is not registered for the VAT. The trader operates with a gross margin 25%. So that means gross profit is 25% on sales. Remember that gross profit, the sales margin, this will be very confusion in the exam. Remember your markup and margin. Don't forget the markup and margin. There will be always 5 marks question in the exam, markup and margin. Markup and margin need to be very clear. Margin is on sale, markup is on cost. Margin is on sale, markup is on cost. So we have a margin here. That means we're talking about the sales. We need the sales. If you don't have the sales, we have to calculate our markup, not the margin. If you don't remember that, your chapter 2 need to be read very carefully. 5 marks question always from markup and margin. Inventory at 1st of April 2016. 6, that is opening inventory because our year ending is 31st of March 2007. So in 2006, 1st of April, that's my opening inventory. Sales is 64,900, very good because we need sales to calculate the profit. Purchase is 48,390. All right, let's read the question now. Let's read the requirement. Using the information, complete the following task. Calculate the cost of goods sold. COS, cost of sales or cost of goods sold for the year end 31st March 2007. They're asking calculate the cost of goods sold. So we already have our sales and we have our profit. Can we calculate how much is the cost? So if my profit is 25% on sale, then 75% will be what? The cost, isn't it? So of this 64,900, my question said the profit is 25%. Then 75% will be cost. That's very simple, isn't it? So if 64,900 is the total sale, if 64,900 is the total sale, and if my profit is 25%, how much will be the cost? So if I minus the 25% from here, so that is either I can minus it or I can do 75% straight away of that. So 64,900 times 75%, that gave us 48,675. 48,675. Any question from here? You need to understand this thing because this question will come in the exam. Very, very careful. If you have any question, make sure you write it down so that I can explain you more. Okay, the next point here is calculate the value of closing inventory. Calculate the value of closing inventory. Now I have to use the formula for that. So I have to use opening inventory plus purchase minus closing inventory and that will give us cost of sales. So we need to now include the figure. So we already have our cost of sales, that is 48,675. Then I have my opening inventory, that is 5050. I have my purchase, that is 48,390. I need to find the closing inventory. How much is the closing inventory? Can everyone try to find the closing inventory? This question will be definitely in the exam. So make sure you try now, because if you try now, if you don't get it, we can explain. But don't be confused later on. If you come back from the bottom, you need to do opposite. So if you come from the top, for example, you add this plus this, because there is nothing here. We're looking for the figure from here. When you go back from there, from the bottom, we do opposite. So from the cost of sales, 48,675, we minus this one, 48,390, and minus 5050. That will give us the figure for closing inventory. So let's do this one. 48,675 minus 48,390 minus 5050. That gives me 4765. Very well done, Fred. That gives me 4765. So please everyone check you know how to get 4765. If you don't know how to get, you try again or ask me how to get. So it's very easy. All you need to know, you need to remember the template: opening inventory plus purchase less closing inventory, and the missing figure, you have to find it out, whatever is the missing. In the exam, that could be opening figure missing, that could be purchase missing, that could be cost of sales missing, could be anything missing. But if you know how to get it, you can get it. So the closing inventory is 4765. Very well done. Okay, let's move on to the next question. So here we have, say you compare this figure with the result of a physical inventory count as at year end. The total physical inventory value is 350 lower than your above calculation. So whatever we have calculated now, 4765, I found 350 less. Now the question is, which one of the following could explain this? Which one would be the possible reason for that? What do you think? What would be the possible reason for that? The first one, they said, some equipment used in the office was stolen. We don't go that side. We don't think something is stolen. There were unpaid sales invoice. No, that's not relevant. A high value of item was included twice in the count. No. The trader has made drawings of goods during the year. So the owner of the company, he took some goods from the company, and that's why this inventory is gone down by 350. Yes, so this is the reason. If the question said the closing inventory have a difference, because I have counted, as I counted, you have counted 100, now there is a 95. What could be the reason? Someone took it. Who can took it? Only the owner as a drawings. All right, so the last one they're asking, update the value of closing inventory to account for the difference above. So how much will be the new closing inventory value after updating this? So after update, I will have the new figure, and this figure will be 4415. Very well done, because I'm minusing the 350 from there. 4415. So 4415. So that's it. Well, obviously, like when the owner took the product, obviously we called it drawings. But the question here is like, we have counted whatever is the closing inventory. Now we have seen 350 is missing. So where it is gone? What is the possible reason? So we said the owner might took it. That's why I said drawings. because at the year end, when there is a year end, 31st of March, we said we have a closing inventory. That much should be this one. Okay, so let's have a look. The next one. The trader has a policy. The trader has a policy of allowing customer to settle their accounts 1 month after the sales is made. So they said, if you buy now, you can pay next month. If you buy now, you can pay next month. The question here is, which of the following is most likely? That means there is no accurate figure. It's the most likely. If you see this type of question in the exam, most likely, so you do your best guess. You do your best guess. So for example, if I said, what is that color? So if someone said black, if someone said light black, if someone said dark black, so this is the most relevant. But if someone said like it's a yellow, it's a red, that is not relevant. This is not correct. So when it is very close, we called it most likely. Most likely. So which of the following is most likely to be the total on the sales ledger at the end of the financial year? What does that mean, sales ledger? They said how much you're expecting at the end of the financial year, because they said when I sell, the customer paid me after 1 month. So for the month of November, or for the month of December, for example, for the month of December, I paid £10,000. So they paid me on January, isn't it? Next year. So obviously 1 month money will be always sales ledger, isn't it? So sales ledger means credit customer balance. Sales ledger means credit customer balance, credit customer balance, or we call it trade receivables. Sales ledger means credit customer balance, or we call it trade receivables. The customer who buy from me now, but he will pay me later on. So here the question said they'll pay me after 1 month. So for the last month, when I make the payment, when the year is end, maybe in December, the customer going to pay me on next month, January, isn't it? So year will be end. So 1 month payment will be recorded as a sales ledger. 1 month payment will be recorded as a sales ledger. So they're asking how much will be the estimate amount. Okay, so most likely amount, how much will be? But before you answer the question, you need to see how much is the total sale for the whole year, isn't it? So total sale for the whole year is 64,900. 64,900 is the total sale. 64,900. And if I divide by 12, 5,008 pound. 5,008 pound is the roughly every month sale. 64,900 divide 12. That is 5,800. No, 5408. 5408. This is my estimate sale per month. Now, if I'm saying here, from here, which one I think my most likely sales will be, like sales ledger balance will be from here? This. Which one will be the most likely figure for my sales ledger? Sales ledger means the amount will be still outstanding. The amount will be not received during the year because the customer paid after 1 month, isn't it? So for the last month transaction, I'll get next month. So which one is close? The close one we have 6940. This is the most likely answer. There is no accurate answer for that. If this type of question you have, you make sure you use the judgment. You use the judgment, you do the right answer. Because this question is the most likely, that means there is no accurate answer for that. So you have to go close one. It cannot be like 16, it cannot be 64, but the sales could increase little bit from 5,400, it could go to 6,900. It cannot go more than that. Okay, so let's move on to the next one. The next question we have here. You are now working on the financial account of another client, okay? Your manager is called away unexpectedly, so he just gone somewhere. He asked you to undertake a particular task with a deadline during his absence. So he said, I'm going for some reason or holiday or somewhere. Can you do my work? You know you have not received sufficient training to do that, but you never done this one before, or maybe just he showed you once. For example, he showed you how to submit the VAT return, and after that he said, oh, remember I'll show you how to do the VAT return, so I'm going for a holiday, can you submit that? What should you do? What should you do? Choose one. Say, do the job best your ability, submit the work, client on time. I will not do that, isn't it? I don't know what is best. In accountancy, we want the figure, accurate figure. We don't guess. We don't say I done the best. So if there is a mistake, what I can do, I done the best. There is no answer for that. Ask if you may have support from elsewhere in the organization. Maybe I can find another manager, maybe another supervisor said like, this is the task my manager give it to me, can you help me? That could be the answer, yes. Then ask a family member. No, we don't do it. We don't take help from outside. Advise client that deadline will be missed. If you do that, you lose the client, isn't it? You don't tell client like your deadline will be missed, because when your manager will be come back, then your job will be no more. So if your manager said to do it, you have to find the way to do it inside the organization. Otherwise, you tell your manager, I couldn't do it. But don't say anything to the client. That would be more risky. All right, so this is the end of the task number 2. Any question from here so far? Any question from here so far from up to task number 2? Okay, so that's fine. We move to task 3. Before we move that, let's take a break. Let's take a 20-minute break. We'll come back after 20 minutes. So we'll start 8 o'clock again from task number 3. So let's take a break. Let's get yourself fresh. We'll come back and we'll start from task 3, and we'll complete all this task. And make sure you write your name for the attendance, because otherwise maybe you'll not get the access for the video, because the admin team need to give you the access to the video lecture later on if you need it. I'll see you in 20-minute time. All right. Welcome back. Let's start with our question number 3. In question number 3, you can see we have 18 marks question here. Let's read this question. This question is saying this task is about final account preparation for a sole trader. Okay. So you have the following information about event on 1st January 2007. A sole trader started a business. The business was not registered for VAT. The sole trader transferred 13,000 of his own money to the business bank account. What does that mean? So if any person introduces any money to his personal account, from his personal account to the business account, what does that mean? This is our capital. So if any sole trader or anyone who introduces of his personal money to the business account, this is the capital. Okay, let's read more. So 1100 1100 was paid from this account. From which account? From the business account. From this account. From the business account. For some office furniture. So this is not the capital. This question is tricky. Remember that I have seen a student. So they take the 13,000 as a capital. They said capital opening balance 13,000. After that, they added 1100 as well. But actually 1100 is not the capital, because this 1100 paid from the 13,000. This is not the additional money he's bringing from his own pocket. So this 1100 basically from this 13,000 from the business bank account. 1100 paid from the account, from this account, for some office furniture. Very, very careful when you read the question very slowly and carefully, because you might think this is also capital. This is not. Then we have 900 of goods. 900 of goods for resale were purchased. The supplier allowed 1 month credit. That's all right. That's a credit purchase. There is no relationship with the capital, this one. Anyway, let's move on and find the requirement. The requirement here is how much is the capital account. Complete the capital account for 1st January showing the balance carried down. So showing the balance CD. So that's very easy and straightforward. So let's start with the opening balance. How much opening balance we have? Balance BD. We can see we have £13,000. This £13,000 we have transfer from my personal account to the business account. So that's my capital. And obviously another £1,100 I paid from here. So that's not the capital. So that's the only capital I have introduced to the business. So that's my balance BD. This is my total. That's my total. And that's my balance CD. 13,000. That's it. That's a very simple question, just to identify how much is the capital. But the question is tricky if you don't understand that. Like if later on they use from this business account for some other reason, you might say this is also capital, but this is not. So make sure you read the question very carefully when you read that. Okay. So we can say bank. Yes, the bank will be more convenient. That's correct. So we said bank because it's not from the opening balance. I just introduced, isn't it? 13,000. Yeah, so it's a bank because we transfer the money from personal account to the business bank account. So we called it bank. Yeah, that's better even. Thank you, Amit. So you can use the bank. Okay, let's move on. Let's move on to the next question. Say you are now working on the financial accountant for another sole trader, Onyx Trading. Okay, you are to prepare the statement of financial position for Onyx Trading as at 31st March 2007 is the year ending. So we are preparing the financial statement. The final trial balance is below. So that means we have a trial balance here. A profit for the year of 42,495 has been recorded. For this year, my profit is this. Oxin has a policy of showing trade receivables net of any allowance for doubtful debt. Our policy is I'm going to take away if I have any allowance for the doubtful debt. For example, if my sales ledger control is 10,000 and if my allowance for doubtful debt is 2,000, so on the financial statement I'm going to show 8,000. So sales ledger control, that means total credit customer balance, total receivable balance minus allowance for doubtful debt. That will give me the net figure. This one I'm going to show on the statement of financial position. This is my policy. All right, so that's not a problem. Let's read the requirement. What is the requirement here? It's using this information, complete the following task. Calculate the value of trade receivables that will appear in the statement of financial position. So they said, find the trade receivables value. That means find the sales ledger control. How much will be shown on the statement of financial position? So you already know the company policy. You have to find the sales ledger control and will minus any allowance for doubtful debt. So that will give us how much you're going to show on the statement of financial position. So let's have a look. Let's look for that. How much is the sales ledger control? Look for the sales ledger control. This is my trial balance. So my sales ledger control, we can see here, 25,660. So sales ledger control, 25,660. And from here, all I need to do, I need to take away the allowance for doubtful debt. So let's find it out, the allowance for doubtful debt, how much it is. Yes, you can see it is 1,200, allowance for doubtful debt, 1,200. Remember that allowance for doubtful debt and allowance for doubtful debt adjustment is not the same thing. Adjustment means like when you have to increase it or decrease it. For example, you think for this year, you have decided for this year, your doubtful debt or trade receivables allowance will be 1,000. But for some reason, you think no, it will be more this year. Maybe you're expecting more customer not going to pay you this year. So you want to keep more allowance. So before you kept 1,000, now you want to increase it. So if you want to increase it, then you make the adjustment. That time you say allowance for doubtful debt adjustment. So when you need to increase it or decrease it, then we use the word allowance for doubtful debt adjustment. And remember, allowance for doubtful debt adjustment is relevant to the income statement or profit and loss account, not to balance sheet or statement of financial position. So from here, we minus this one, allowance for doubtful debt, that is 1,200. And my sales ledger will be how much? 24, okay, 24,460. All right, so this will be our sales ledger control balance. So here we'll go back now, and we're going to write here 24,460. That's it. So find the sales ledger control. So we have a name. Sales ledger control is also called trade receivables. Same thing. So find the figure minus the allowance, whatever it is, that's my net. This net we're going to show in the statement of financial position. All right, so let's move on to the next question, the next requirement. What is the next requirement we have? That one we can see our statement of financial position. We can see the trial balance. Let's have a look what they're asking to prepare. So they're asking to prepare non-current asset, current asset, so statement of financial position basically. So let's take the figure from here, what we need. So very quickly identify which figure or which item relevant to statement of financial position, and we can write it down in the corner. So let's find it out together. Accruals. Is it relevant to the statement of financial position or not? So everyone we try together. Accruals. So we said yes. So we said this one will come. Then we have a admin expenses. This is for the profit and loss account, so it will not come here. Then we have a advertising expenses. That is not relevant. Then we have allowance for doubtful debt. This one we make the adjustment already, so obviously this is relevant, yes. And then we have allowance for doubtful debt adjustment. That is no. Then we have a bank. Bank is a current asset, and obviously bank will come on the statement of financial position. So this is asset. Bank charges, this is expense. We said no. Capital. Capital will be our, obviously, the finance by section. So this is also our relevant. Closing inventory. This is also asset. So closing inventory is our asset, so it will come. Depreciation, this is the item for the income statement. We said no. Disposal of non-current asset. When you sell any fixed asset, this is the profit. This has to come to the income statement, not here, not in the balance sheet, so it will not come here. Drawings. Drawings is the item for balance sheet. Yes, it will come. Equipment cost, so that means fixed asset. That will come. Accumulated depreciation, this one we're going to minus from the equipment cost. The answer is yes. Opening inventory, that's relevant to cost of sales to the profit and loss account. The answer is no. Payroll expenses, that is also expenses. So this one will not be relevant. Payroll liabilities, we have to pay some tax to HMRC. So the answer will be yes, it's like a VAT. Payroll liability, exactly, it's a current liability, it's like a VAT. It will be yes. Prepayment. Prepayment is an asset. It's a current asset. So prepayment 900 will come. Purchase is relevant to profit and loss account, so it will not come. Purchase ledger control is a trade payable. Is a trade payable. Is a current liability, it will come. Rent, no, is expense. Sales income, no. Sales ledger control, yes. Trade receivables, that will come. Sales return, no. Item for the income statement. And the VAT, VAT is the liability, yes. So let's write it down quickly, all of this, so that accruals 1940, then have already adjusted that, allowance for doubtful debt, so you don't have to worry about it. Bank, we have 1645, that's debit. Then we have capital 22200, that's credit. Then inventory 22420, that's a asset, the debit. Drawings 20,000, debit. Equipment cost, that is 32,800, debit. Accumulated depreciation, that is 14,350, that is also credit. Then we have payroll liability, current liability, that is 630, credit. We have prepayment, asset 900, debit, current asset. Purchase ledger control 16,720, credit. Then we have sales ledger control. This one should be the figure we done, 424,460. That's debit. And the VAT 3,3890. That's credit. That's it. So we all have our information for the statement of financial position. So all you need to do, you need to now record everything here. Doubtful debt, we already minus this one from the sales ledger control. So we're taking the sales ledger control after minusing this 200. So obviously we don't have to bring it separately here. And this one will give you a stress in the exam. Make sure you're very happy with the doubtful debt adjustment, debit side, credit side. Make sure you have a very good preparation for that, because I have seen students, they stuck on this doubtful debt. Okay, let's start with the first one. The first one, we have non-current asset, that is equipment. We have, that is 32,800, equipment 32,800. And the accumulated depreciation, this one we have 14,350, 14,350. And let's find the difference. 32,800 minus 14,350, 184,550. Okay, so 184,550. That's our non-current asset. Now let's talk about the current asset. The first thing, we have inventory. Inventory we have, that is 22,420, 22,420. Then we have sales ledger control, trade receivables, that is 24,460. Then we have prepayment. Prepayment we have 900. And then we have bank. Bank we have 1645. That's it. Now we need to make the total. If you added all of this, how much will be the total? That will be our current asset, 49,425. Thank you, Theodora. Thank you, Amit. So 49, I'm going to write it down here. 49,425. That's my current asset. Normally you need to write it here, but there is a zero, so I'm writing there so that you can see it. 49,425. Then we move to the current liabilities. The first thing we have trade payable, so purchase ledger control, trade payable, that is 16,720, 16,720. Then we have accruals, 1940, 1940. Then we have a payroll liability, 630, payroll liability, 630. Then we have the VAT, that is 3890. And the current liabilities, how much it is, Sumit? 23,180. Okay, so I'm going to write here 23,180. Okay, so after that, you're going to find the net current asset, that is this minus this. So current asset minus current liability, that will gives me net current asset. How much it is? 26,245. Very well done, Theodora. 26,245. And I'm looking for my net asset. So that will be this plus this. So non-current asset plus my net current asset, that will give me my net asset. So 44,600, 44,695. Very well done. Okay, so this is done. So the big section is done. Now we have to do like our next section, that is capital. So let's find the opening capital. How much was the opening capital? So opening capital was 22200. So opening capital 22200. Then we have to add the profit. Add profit and less drawings. So how much is the drawings we have? 20,000. And anyone remember the profit? How much was the profit? 42,495. Okay, it's on the beginning of the question. If anyone don't remember it, it's just on the beginning of the question, the profit 42,495. Okay, 42,495. So if I have this one, so opening capital plus profit minus drawings. So the closing capital exactly has to match with our net asset. So 44,695, 44,695, and it is actually match. If it is match, that means you got 100% marks from this question. Remember, that is very, very important, this question, because this is the only type of question you will know you'll get 100% marks from there or not. If it is match, that means it's done really well because you got full marks from this question. All right, so from any question from here before we move to the next requirement? Any question from here before we move to the next requirement? No? Okay, let's move on then. Okay, there is a requirement C here. It says complete the following. Drawings for the year will be transferred as what? Debit or credit? Drawings will be transferred as a debit or credit to the capital account. Drawings always debit. Remember that. Drawings always debit because capital is a credit, so drawings is a debit. So drawings always minus the capital. Drawings always reduce the amount of capital. The opening balance in the capital will be now how much? Whatever was the closing for last period will be the opening for this period, isn't it? the same thing, 44,695. Whatever was the closing for last period for 2007, 31st of March, 1st of April 2017 will be same thing. Closing for yesterday, opening for today. All right, so let's move on to the next question. Question number 4. We have to answer 6 questions in the exam. Okay, let's have a look. This is kind of the theory question. Let's do it together. Say, this task is about the knowledge and the understanding for the final preparation, okay? Complete the following statement. Which one of the list below is a benefit of running business as a sole trader? What is the benefit to run business as a sole trader, not as a partnership or not as a limited company? So you have a full control, isn't it? You can do whatever you like. You take the decision now, it will be implemented now. For example, any decision you need to take, it will be done immediately. So complete control over the business decision. This is the main advantage of sole trader. Okay, that's fine. The next one, complete the sentence. A private limited company is owned by whom? A private limited company is owned by the shareholder. Remember that the company always owned by the shareholder, not the directors. So don't think directors are the owner of the company. Directors can be or cannot be owner of the business, but the shareholder are the people who are the actual owner of the business. Okay, let's move on. The next one we have here, which of the following business have owner with a limited liability? So which business the owner have a limited liability? Not the partnership, of course. This LLP, limited liability partnership, and PLC, private limited, public limited company. So if this is limited, then it's limited. So it's 2 and 3. Very good. This one. All right, so let's move on to the next one. The next one, it says complete the following. To be a clarity, an organization must satisfy the definition of a charity found in the where? Charity Act or Code of Practice for Non-Profit Organization. If you want to run a charity, you have to follow the Charity Act. If you want to run a charity, definitely have to follow the Charity Act. And its purpose must be benefit of the public. Trustee means kind of who are the owner of the charity. So it's not the benefit for them, it's for the benefit for the public. Okay, let's talk about this one. The next one we have, which one of the items below describe the format of final accounts for the organization adopting IFRS? So what was the format? What is the presentation? Which IAS said you need to prepare the financial statement like that way, like revenue, then cost of sale? Which IAS tell us? So every IAS have a meaning, isn't it? So every IAS tell us do that, do that. So if the question said which IAS tell us for the format or for the template how to present the financial statement, that is IAS 1. So IAS 1 tell us how to present the financial statement. For example, first you're writing the revenue, then you're writing the cost of sales, then operating expenses, then profit. Why are you following the step by step? Because of the IAS 1. Because of the IAS 1 tell us to do like that. Otherwise, we can say first operating expense, then we can say cost of sales, then we can say revenue, and we find the profit. The figure will be same anyway, but the presentation will be not right because the presentation have to be followed by IAS 1. Okay, so next question we have here, number C. Link the box to match the following user of financial statement. So the person who used the accounts financial statement like profit and loss account on the balance sheet. So for example, the management. Why management need to use it? So assessment of the security of the loan? No. Decision making for the personal investment. No, management don't do personal investment. To compare information from the organization operating within the same business sector, yes. So to compare, are we doing good than other people or are we doing bad than other people? For making the comparison, they have to see the financial statement. So this is the reason they have to see that. Next one, shareholder. Why shareholder need to see the financial statement? Because they want to see they're investing to the right company, isn't it? So decision making relating to their personal investment, because they want to invest their money, so they want to see the financial statement, how it's going inside, so that they feel safe before they invest the money. All right, that's not a difficult thing, that's the easy thing. Let's move on to the next question. We have a task 5. Task 5, I think, is from the partnership. Let's have a look at that. So you can see here this task about the partnership. Which one of the following should be included in a partnership agreement? Out of these 3, which one you think you should include on the partnership agreement? The partnership appropriation account, salaries and wages to be paid to all employees, the rate at which interest is to be allowed on capital. Yes, this is the third one. Remember that if there is the interest need to pay, it has to be included on the partnership agreement. So that if you leave your capital or if you want to take an interest, it has to be included on the partnership agreement. You have the following information about a partnership business, okay? Riva, Sam, and Terry. Riva, Sam, and Terry has been its owner for many years. On 31st March 2007, Riva retired from the partnership, okay? Goodwill was valued 52,000. So Riva is retiring and goodwill is value 52,000. Has not yet been entered in the accounting record. So you just said the goodwill value is 52, but you didn't record it. Profit share before the retirement. Before the retirement, profit share was 50, 40, and 10. After the retirement is 70, 30 because Riva is gone. Riva is retired, only Sam and Terry is left. So now the profit share ratio is 70 and 30. Goodwill is to be introduced to the accounting records 31st of March with the partnership and immediately eliminate. So we already know that goodwill we cannot keep on the accounts. Goodwill is just the value we included on the accounts to increase the capital value. So increase our capital to increase the value of the capital of the partners, we introduce the goodwill. Either when someone try to join or when someone try to retire. Why? Because the business value is always not same. So for example, if we started a business 20 years back and the business has some of value. So when we started 20 years back, the business value was 10,000. Now the business value is 100,000 because I have a lot of reputation. I have a lot of clients. The business is successful. So the value of the business gone up. So this value comes from the goodwill. So increase our capital so that we say to the people, our business value is now this. So remember, when we include the goodwill is on the debit side. So when you record the goodwill is on the debit side with the old profit ratio, old profit ratio. I hope we remember because last week we done the partnership. So goodwill recorded on the debit side with the old profit ratio and eliminate on the credit side with the new profit ratio. New ratio. So the debit side with the old ratio and the credit side with the new ratio. So 52,000, if you do that, 52,000, 50% for Riva, Sam for 40%, Terry for 10%. Let's record the goodwill first. So we do 52,000 and 50% for Riva. 52,000 times 50% for Riva. So Riva will be, is it capital? Riva's capital will be increased by 26,000 because of the goodwill. Then capital for Sam. Sam is 40%. So that will be 52,000 times 40%. That is 20,800. 20,800. That will be for Sam. And the last one for Terry. Terry capital will be increased by 5,200. That's the remaining one. And total will be 52,000. So everyone capital is raising because of the goodwill. Now I have to eliminate the goodwill to the new ratio to the new partners who is left, not the new partner who is left. So I have Sam and Terry left, so I'm going to eliminate that. So now it was before debit. Now I'm going to make it credit. So debit and credit will be offset. Whatever is remaining, actually this is the capital. So Sam, so capital, Sam, is it 36,400? Okay, Theodora, 36,400 and 15. Okay, 36,400 and Terry capital 15,600, 52,000. So this journal, please remember that this one will come in the exam. So don't be confused. When you record the goodwill, you record on the debit side. When you eliminate it, eliminate on the credit side. When you remove it, debit side, when you record it with the old ratio, when you eliminate it, is with the new ratio. So like that, the journals and everything on the chapter number 5, chapter number 4 with the partnership, you can read yourself if you're confused for any reason. All right, let's move on. Let's have a look at this question. It says, you have the following information about another partnership business. Okay, there is another partnership business. The partners are Asma and Ben. So we have two partners. One is Asma and one is Ben. The financial year end is 31st of December. Okay, there is no interest on capital on drawings. So there is no interest on capital. There is no interest on drawings. That's fine. No problem for that. Then we have figure relating to the year end 31st of December 2007 were as follow. Profit share, Asma 60%, Ben 40%. Then salary per month, so we have to multiply by 12. Remember that. If the salary is for per month, you need to make sure you multiply by 12 to get for the whole year. Sales commission during the year, okay, this is this. Drawings, this is this. Okay, profit for the year, 80,000. So the total profit is 80,000 before appropriation. Let's find it out. What is the requirement? Let's say prepare the appropriation account. Okay, let's do that. This is our appropriation account. We know how to do it. There is no problem for that. We can write it down in the corner. Okay, let's start with profit before appropriation. So we said profit before appropriation, that is 80,000. That was the profit before the appropriation. From here, first we give the salary. So salary, so we have salary for Asma. How much is the salary for Asma? So we have 1950 times 12, so 23,400. 23,400, that's the salary for Asma. And then we have a salary for Ben as well. How much is the salary for Ben? 16,800. Okay, 16,800. Then you have a sales commission. Sales commission. So for Asma is 4,500, and for Ben is 8,300. Isn't it? That's it. Now I'm going to find how much profit is remaining after paying all of this. How much profit is left over from the 80,000? So from the 80,000, I'm going to minus all of this. So 80,000 minus 23,400 minus 1680, 800 minus 4,500 minus 8,300. How much is the profit remaining? So our profit remaining is 25,000. We called it residual profit. Residual profit for distribution. The profit left for distribution is 27,000. So this is the profit we have to distribute between Asma and Ben. So Asma is 60%, Ben is 40%. So we can split, but let's have a look if the question asks for anything else. No, the question didn't ask anything to split the profit. So yeah, they have here share between the profit. Okay, so we'll do that. Share profit. So Asma 60%, Ben 40%. That's not difficult. So 16,200 for Asma, okay. And for Ben, 10,800. All right, that's good. That's good. All right, let's move on then. The next one we have here something. On 3rd January 2008, Ben takes some good for personal use. Drawings, isn't it? Take some good for personal use drawings. His current account will be what? Debit or credit? His current account will be debited. Remember that drawings always debit. Debited with that value. All right, that's it. Let's move to the next one. Task number 6, 21 marks. On task 6 is from the partnership. This task is about final account preparation for a partnership and introducing to reporting regulation to a limited company. Okay, you are preparing the statement of profit and loss account for Onyx Partnership for the year end 31st of March 2007. The partner are John and Pat, who share profit and loss equally, so 50-50. This is their only entitlement to profit. Okay. You have the final trial balance below. All the necessary year-end adjustment has been made, except for the transfer of profit and loss to the current account to the partnership. So only profit and loss, whatever is the profit, is not transferred to the statement of financial position, except that everything is done. Prepare the statement of profit and loss account. Okay, we'll do that. No problem for that. This is the trial balance. Let's look the template, what we have here. So preparing the profit and loss account. All right, that's not a problem. We can do that. Let's prepare that. So first of all, we need to find it out which one will go to the statement of profit and loss account. Let's find the item. Which one will take to profit and loss account? First thing first, we'll look for the, let's look at one by one. So here accruals, we can see here accruals is not going, no. Then allowance for doubtful debt, that will be minus from our sales ledger control, so that will not go. Then we have allowance for doubtful debt adjustment, isn't it? This is the one will go for the profit and loss account. So he said yes. This one is on the credit side. So allowance, doubtful debt, adjustment, 600 credit. That means that will be added on the income. Then you have a bank. A bank is not going. Capital account, current capital account, PAT is not going. Cash is not going. Closing inventory. The inventory is going. So we have opening inventory and closing inventory. We'll see if there is opening inventory. Closing inventory is not going anywhere. But this one will be one minus from the cost of sales. So we said we'll take it. Then you have a current account, John and Pat. Depreciation, yes, depreciation is going. Very well done, Amit. Then furniture cost accumulated, no. Loan interest paid. Loan interest paid is expense, is going. So we said closing inventory 25,100. Then you have a depreciation, that is 9,700. Then we have loan interest paid 168. Then you have a loan payable, that's a liability. Office expense. Office expense is expense, isn't it? So this is going office expense 31630. Then you have opening inventory. Yes, opening inventory, that is 24,500. Then payroll expense, yes, is expense 16,950. Prepayment is not going because prepayment is a asset. It's not going. Let's go there. Purchase is going, of course. Purchase 153670. Then sell, yes, sell is going to 55480. Then sales ledger account is not going. Selling expense is going. Is expense 10,542. Yes, I think more or less this is it. So let's start with the question. If you need something, we can come back later on. So when you have the question in the exam, make sure you identify the item quickly on this scrap paper, quickly write it down in small form so that when you complete this one, you can do it really quick. Okay, so let's start with the sales revenue. For the sales revenue, we can see our sales is 255,480. 255,480. That's my sales. Then we have to find the cost of sales. So we do the opening inventory. Opening inventory, that is 24,500. 24,500. Then you have a purchase plus purchase. The purchase is 153,670. 153,670. Then you have a closing inventory, that is 25,100. Closing inventory, that is minus 25,100. And that will give me the cost of sales. Can anyone find it out, the cost of sales, how much it is? That is 24,500 plus 153,670 minus 25,100. Thank you, Amit. So you have 153,070. How much is the gross profit? The cost of sales from the sales. So sales minus cost of sales will give us the gross profit. 102,410. Okay. 102,410. All right. So on the add, I'm going to add the allowance for doubtful debt adjustment. So I'm going to say allowance for doubtful debt adjustment. That is 600. If it is on the debit side, you write on the debit side, that will be expense. Okay, after that, we say less all the expenses. Start with the depreciation. How much is the depreciation? 9700. 9700. Then you have office expenses. That is 31,630. 31,630. Then we have payroll expenses. Payroll expenses 16,950. Okay. And then we have selling expense. Selling expense, that is 10,542. Okay. Then we have a loan interest paid, the last one. Interest paid. 168. So the total expense, can you add all of this to find the total expense? How much is the total expense? 68,990, very well done. 68,990. And if we minus this one from the gross profit, so gross profit plus 600 minus this, how much is the profit or loss? So on the profit or loss, is it profit or loss? It's a profit, isn't it? The profit 34,020. All right, so we have this profit. It's not very difficult, you can see it. If you know which item go to where, like which item go to income statement and which item go to statement of financial position, it's not difficult at all. All right, so let's move on. Let's have a look what question we have more from here. Okay, so let's have a look. What is the next requirement? If they calculate the John share of profit or loss for the year end for the financial for his final account balance. So how much was the profit? And the profit and sale, the loss share ratio was 50-50, isn't it? So how much John will get? So from 30,020, isn't it? So he will get half, 17,010. He got 50%. And how much will be the current account balance? So current account balance means opening balance for the current account plus profit, isn't it? So let's have a look. How much is the opening balance for the current account? Let's go and find the opening balance for current accounts for Jan. So current account opening balance 780. So 780 plus profit. How much is the current account balance for John? 17,790. Very good. Then we have the next question. The next question here is said, where will the current account balance for John appear on the statement of financial position for Onyx? So where are you going to show it? Within the finance by section as a current liability, or the current account will not appear in the financial statement? Which one? So on the partnership, we know only for the partnership account on the finance by section, only combined with two figures. One is current account, one is capital. So these two, the combination, this two is the combination for finance by section. So current and capital both will come to the finance by section for the partnership financial statement. All right, let's move on. What is the next one? Let's clear everything. Okay, we can see here the next question we have here. The preparation of the final account for a limited company as its year and require more detailed reporting for than a sole trader partnership. Okay, which of the following statements are true for a limited company? Okay, what is that? Which of the following statements are true? Okay, a taxation charge should be shown in the statement of profit and loss account. Is it true? A taxation charge should be shown on the profit and loss account? Yes, that's true. Full analysis of the non-current asset must appear on the statement of financial position. Is it true or false? So a full analysis of the non-current asset. No, it's just we said like this is our non-current asset. We don't show the analysis in the statement of financial position. No, we don't show any analysis. Full analysis of non-current asset must be appear on the face of the statement. It's not face means on the non-current asset. We just said like our asset is 1 million minus accumulated depreciation and the net book value. We don't give any breakdown here. No analysis here. So we don't do it. It's a false. Notes to the financial statement are available to the third party. Is it true or false? So any explanation on the accounts, it is available to the third party. That means anyone can see it. Is it true or false? The answer is true. That's true. Any financial statement that is available for everyone is nothing to hide, because the financial statement for the public or private company, if it is relevant to the other people, they have to see it. So the answer will be 1 and 3. All right. Any question from here? If you have any question, you can ask me now. No? Okay, so let's move on. I think this is the end of the question. So this is the end of the paper. You can see it. So we have practiced one full question from the question bank, and you have see like how many questions will come, what type of question will come, how we make the answer, how many marks will become from which chapter. So now we have some idea, and we try to revise everything from the book. And of course, like more you practice, you will be more like efficient for the exam. It's very, very important you practice a lot. Tonight, I'm going to send some more practice questions to everyone. So I'm going to send like few more practice questions with the answer. So you practice yourself and make sure you look at the answer and try to understand. So your first job will be, you read the book once again. It's only 5 chapters. So it's not going to take long. So your first job will be read the book once again, do all the activities from the book once again, and end of the chapter, there is a test you're learning. So you try to solve this question as well, test your learning. So you complete the book first. So all the information, all the knowledge you will have on your head. After that, what you'll do, you start practicing. Yeah. So you start practicing. Once you start practicing from the practice paper, so you have some more questions, then you try to solve it. The next thing will be, you log into your My AAT account, you log into your My AAT account, and from there is something called green light test. You practice all the green light tests from there, and also there is a practice assessment, 2 practice assessment. You make sure you do this practice assessment at least twice. So at least do this practice assessment twice. So from the My AAT, so you log into My AAT, log into the training and resources. On that page, you select Lifeline portal. On the Lifeline portal, you'll see all the paper name. Click Final Account Preparation, it will be open. Then you see all the resources are there. So green light test, then you'll have your practice assessment. So at least practice the green light test and 2 practice assessment at least twice. And I'm going to send some practice question tonight, hopefully, and hopefully you can do that. You can try this one, Freight. Sometimes what happens, you don't have the Adobe. If you don't have the Adobe on your computer, you cannot open it. And sometimes you need to zoom out. So your computer screen is too much zoom in, so you cannot see it. So obviously, make sure you need to zoom out. But if you have any issue, you take the screenshot and send it to me. And if I think everyone knows we have a WhatsApp group for this AAT level 3. If you don't have it, if you are not on the WhatsApp group, you can send me your number through email. Just send me your phone number through email and say, can you add me on the WhatsApp group? I will add you on that group. So you can discuss with your other colleague as well on the group. And if you need any help, maybe other people also can help you. So if you are still not member of the WhatsApp group, you can send me your phone number. I'll add you on the group. And for the exam, we'll do our exam next week exactly. We'll do next week. Today is 17, so next week will be 24. So 24, we're going to do our exam. But I'll send you the email. I'll speak to the admin team first with the KBM admin. And it is for sure, if you do exam in Barking, it will be Thursday. If you do exam in Barking branch, then it will be Thursday, next week evening. So if you don't do in Barking, then it will be in Parkwell, but I need to speak with them when it will be the time for them. I'm going to send you an email tomorrow, writing everything. so you will get it like when will be the exam, but your exam will be next week, Thursday in Barking for sure. For the Park Royal, it might be Thursday or maybe Saturday. You can choose, but I'll speak with the Park Royal people first, and I'll get back to you. But for the Barking people, it will be Thursday evening for the final record preparation exam. If you have Internet Explorer, make sure you try with Chrome or with Google Chrome or with Mozilla Firefox, because Internet Explorer sometimes not work. So you download that browser, Google Chrome, that will help you. And two things. One, you make sure you have Adobe on your computer. Next thing, you zoom out the window a little bit so that you can see everything. Sometimes it's open, but you don't see the next button. So make sure you zoom out. And if you still have any issue, take a picture, send it to me. I'll tell you what to do. All right, so if you're not ready, you can do exam later on, but my advice will be like, do the exam with the flow, so that we're gonna start the next paper. So after the next week will be no class, it will be exam. So after the next class, we will, after the exam, basically we'll come back. So next week will be 24, so exam will be 24. And 1st of October, we're gonna start our new paper. That will be indirect tax. So you're gonna start with indirect tax in 2 weeks time. So it's better to start with the new paper and you pass this paper. If you're not ready, I would say you can do later on, but best advice will be you can be ready within a week. So do some practice, will be ready. Yes, Theodora, if you're ready, you can do the exam. There is no problem for that. The management accounting costing will start, obviously, we'll do one by one, so you don't have to worry about it. We have to complete all the paper anyway. So the next one we're going to indirect tax, because before we have just done management accounting before that. So we will come back again for that. Now we'll do the final exam, Umit. So next week we'll do the final exam for that. There is no mock exam. You can practice from your home, from your MyAAT login. So you have to make sure you do the final exam next week. All right. So if you are not ready, you can do exam later on. But I would say do your exam is better. Always do the exam. So it's going to be start from 1st of October, Theodora. So you're going to start our indirect tax from 1st of October. So next week will be 24, that will be exam. So 1st of October, you will be your new module that will be started indirect tax. All right, so if you have any question, you can always email me. Or if you're on the WhatsApp group, you can write it down there as well. So I'll see you not next week, because we're not gonna meet next week. Next week will be the exam. So I'm gonna see you week after. So that will be 1st of October with the new paper indirect tax. If you have any question during your during this time, you can email me. I will definitely get back to you through the email. And otherwise, if you do exam in Barking, I'm going to see you in Barking. But I'm going to send you email tomorrow to writing everything about your exam. So I'll meet you in 2 weeks time. If you have any question, you can write me now, or you can ask me later on. There is no problem. Thank you very much for joining me today, and absolutely, hopefully we'll done really well. And if you do some practice, you'll be fine. So nothing to worry. I'll send you some more practice question, do some more practice, and you'll be ready for the exam. It's not very difficult thing. Final account preparation is a small chapter, so you'll be fine. Don't worry about too much. Do some practice, go for the exam, you'll be fine. But make sure you do the practice assessment from your AAT website. It's very, very important. Sorry, guys. Well, I'll see you next week then.